Edelweiss Balanced Advantage Fund review, and this is based on the request of few people in our YouTube channel. So if you have any questions, if you want to review some funds or any insurance product or any stock, please do post your comments. So I'll be happy to share my review on that particular fund or particular insurance product. So hi, hello, this is Ganesh Santuru, your stock market profit coach and author of the book One Page Stock Market Plan. So today it's a review of Edelweiss Balanced Advantage Fund, and it took few days for me to post because there was some other videos which was lined up, right? So thank you so much for asking these kind of questions, so that it encourages me to do more videos and to share my knowledge also with you people. Thank you so much for following and asking specific questions. So let's go into this. Is what is this Edelweiss Balanced Advantage Fund? Balanced advantage is nothing but you have mix of both equity and debt. That is the advantage of balanced advantage fund. Earlier it is also called as dynamic asset allocation fund. If equity is more, debt will be low. If equity is falling, debt portion will be increased, which means that the cushion of equity returns along with debt, it will give you returns anywhere around 10 to 12%. This is the advantage of this fund, particular fund. Let's look at analyzing this particular Edelweiss Balance Advantage Fund in moneycontrol.com. If you look at, uh, let's look at it was launched in 2009, 20th August 2009, and this, just look at the expense ratio. It is just 1.09% as of 30th June, last quarter results, and category average is 2.13, which means that based on the asset size, this is one of the huge. Let me show you the asset size of this company, which is around 4,500 crores. Next to ICICI Balanced Advantage Fund, this fund has got more assets. ICICI Balanced Advantage has got more than 30,000 crores, and this fund is having almost more than 4,000 crores. So that is the reason they are able to give you at the rate of 1.09 percentage. And this is an equity fund, and it will be taxed as usual. The equity fund will be anything above 1 year is long-term capital gains, and above 1 lakh will be charged at 10%. If your profit is less than a lakh, you will not you don't need to pay anything extra. And if it is short-term capital gains, you need to pay 15%. That is the advantage. That is with respect to taxations. Okay, and let's look at the scheme details. It is loading, just to give me a minute. Okay, we are at the scheme details. Let's look at a snapshot. Sorry. Okay, if you look at dynamic asset allocation fund and how much this scheme has given compared to Nifty 50, Nifty 50 is just 25%, whereas this scheme has given 31%. And if you look at since inception 20th August 09, annualized return is just 10.93%, and the category average is just 11.18%. If you look at balanced advantage fund has been recategorized, and strong rules has been enforced. So maybe because of that, the category average itself had gone down. If you look at, I just said, if you're looking at 10 to 12% returns, this is the best category you should invest in. You will and average timeline, maybe if you ask me 2 to 3 years, you should be seeing some close to 9 to 10% returns on an average. And if you look at this fund has performed a better compared to the previous category average in terms of 1 year, 2 year, 3 year, 5 year, and even 10 year. One in since inception, maybe it is just on par 10.93, 11.99. I don't see any difference. So it is one of the top performing funds if you ask me in the balanced advantage category. Let's look at the portfolio of this fund. Okay, this is the portfolio which you can also see, and equity is 72.86%, anything about 65% it's okay, and minimum is 65, and debt is 8.79%, and remaining they are holding it in cash, we can see. And what is the advantage if you are looking at this equity portfolio is right from ICICI Bank, Tata Steel, different categories, it's almost diversified. Telecom, banks, diversified sector, which is FMCG, Hindustan Unilever, and mining company Vedanta, industrial minerals, housing finance company, cigarettes, ITC cigarettes, equity holdings, so many different. Pharma is there, general insurance is there, and auto ancillary company. If you look at, there are so many portfolios in so many companies in this portfolio, and it means they have diversified their stock picking. So they are expecting growth, and if you look at minimum investment is right from 144 crores, they have invested as small as possible. In terms of Siemens, they just invested 7 crores, 0.01%. If you look at, it's very, 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 very small. they are increasing, churning the portfolio so much, so they are able to see good returns in their portfolio, and this has worked for them. And what is others? 18.35%. Trips, which is 13.43%, which means almost 13.5% they are holding it in uh, easily accessible returns fund. So if they can take it and they can invest, or they are holding it, that is what they are doing. And Brookfield India Real Estate, this is investment infrastructure trust, we will call, and that is just 0.55%. And HDFC warrants, they are holding 0.13%. So altogether this is 18.35%. And debt, let's look at debt portfolio. And government of India, and which is sovereign, highly credit rated, they are having in that. And treasury bills, and mostly India Grid Trust, again and it is an NCD. And treasury bills and Britannia Industry NCD and bonds, they are holding close to 1 per almost very small. So all are AAA rated and or sovereign rated. So that is advantage of investing in this particular fund. So if you look at automatically, this is one of the best performing fund in the balanced advantage category. Hope you got a detailed analysis of Edelweiss Balanced Advantage Fund. So can you invest in this fund? Based on your investment returns, it is just around 10 to 11 percentage. And if you are looking at short term 2 to 3 years perspective, or maybe at the maximum if you want to extend up to 3 to 4 years, please go for this investment, or else you can choose some other equity funds. So be clear, every fund category has its own performance, and because of their category, because of their structure, look into it and then invest. Thank you so much. If you have any doubts, please post it in the chat box.